An inverse head and shoulder pattern setup is in full effect on the USDCHF, the Dollar Swissy. It's such a beautiful picture. You can Google inverse head and shoulders to learn how to trade this pattern. Traders are salivating all over the planet regarding this opportunity. We're trading from home during lockdown, and we're showing you how you too can make money from home. Here's a disclaimer, it's required by law. And if you find value, please subscribe and share. And as always, we enter trades with risk. Let's get to it. Let's let's do a review of the Dollar Swissy. Interesting pair. What we'll do, we'll go to the weekly chart. Interestingly, you can see it's pretty much in a sideways motion, right? But that doesn't tell you the full story, right? I don't know, that sounds like my internet's going in and out. I don't know what's happening. I'm still here, so I will continue. So doing a review of the Dollar Swissy, it looks like it's just inside, but this pair is cheap right now, okay? And when I say cheap, is when it was expensive, it was $1.82, $1.83 up there. So if now it's gone to as low as 70 cents, 70 pence, whatever you want to call it, 70 pence. Okay, I call that, well, it is a dollar, and it's a US dollar thing. So, you know, so that's 70 cents. It's really cheap. I mean, bloody hell, that's less than, you know, that's like going to the shop to buy something, right? And at its highest price is a $1.84. It's less than half price right now, right? Right? This is like an 80% discount. Let's have a look. In its lifetime since 1997, the dollar Swiss has never been so cheap. So that's point number one. Okay, as we consider trading this pair, that's point number one. Point number two, if we look at the lows, lower low, higher low, but this is even a higher low. So potentially this could be a turning point. Okay. Let's delve a bit deeper into this trade. We're just looking at it. So there's a level that could be respected, right? And what I do is when I look at levels that could be respected, I also think about, some of you have heard of ICT with its order blocks. Some of you have heard of Wyckoff. I don't trade their strategies, but I'm not an idiot. Obviously, everybody's strategies work. And if the strategy combines with your strategy, then it's obviously worthwhile looking at it. This this pair that we're looking at, I mean, you could throw a trend line and say, hey, look, it's had a trend line break, so it's going to the moon. But, you know, trend line break, retest, hasn't had a retest. So we could say that. But what I would do is on looking at this one, I see an order block, see, there. Right, I see an order block there, right? The down candle prior to the up move. This is the weekly chart. If we go to the daily chart, you see a bit more clearly now. Down candle prior to that move. This order block. Now, what I would do, by the way, that's the low. This order block here, right? I'm going to go to block itself. And there's two ways you can go the whole thing, but I don't want to miss the trade. So I'll go for the actual order block itself, the block, open, low, high, close. And I'll include this one as well. And I know sometimes it comes to the wick, but typically we're looking at the body, right? So for me, this is a turning area. This is an area that potentially could turn. And then I look back previously and I'm looking at it. Look, here's when we're going down. Prices violating the order blocks. Okay, so violating. They're all being violated until it finds a low where it bottoms out. Right? New order box created, and then it's going up, and then it comes back to respect the order block, and it continues up. And each of the pullback basically is respecting an order block or a mitigation block or something, whatever. Right? This order block was violated here. Right? So we've come back, we've gone up, right? We've gone up, and now up, we've come down, we're violating. This one has been violated, right? We've gone up, we've come down, found the bottom, then we've started respecting, come down, violated. Since that's already been like, it could be that prices come down to what? Violate this order block, right? So is the order block going to hold? Is it going to fail? We don't know, but what we do know is prices dipped into it and has come out of it. That's all we've got to go by, right? It's gone into it and come out of it. And now, interestingly, over here, we know that this area here is an order block, the down candle. This one here, down candle. Ignore this one here, down candle, up move. There's the order block. And I'm going to go to the body. And then I'll do the base. Because if it gets violated, now we know in this wick, there's definitely an order block, right? So we understand what price can do. If it violates the order block, it'll drop down below it, give a wick into a void, which this is a void, and it'll get some super strength and it'll go up. So if it goes down there, we know we've got a much bigger trade on our hands. But at the moment, we're here, we're in this order block, and price dipped into it and has come out. All right, so that's where I am with the dollar Swiss. Now, we're going to look in, so it dropped into the order block. Now, this is a bloody interesting trade, okay? Because how price moves is lower, high, lower, high, lower, high. At some point, it was trying to turn here, right? Because if you look at it, each of these segments are months, and this is a lower month, then this was a lower month, but then it broke the high. So lower high, lower high, lower high, higher high that month. And these first candles of the month, it was right on the Y. So higher high, well, that's a lower. So that first candle is going to count, which is the first day of September. So it counts. So that's a lower high just by a pip. Lower high, lower low, higher high we got this month. Then we got lower high. It's really messing around. Yeah, lower high, lower high, higher low. So it's an inside month. Lower low, lower high. This is a lower high, lower low. And this month started off with a lower low. So, likely a lower high will come in here somewhere. So it's finding, at this point, could potentially be finding its high. And that could be the high right there where we are now. We don't know. We don't know. That could be the high right there right now. Okay. So we've dipped into an order block. We've come to a level, an area of liquidity where price could say to itself, I'm going to turn around here. Price has been going down, down, down for a very long time. We've looked at the New Zealand dollar, and what we found on New Zealand dollar was a head and shoulder. But I'm looking at this, and I was like, maybe I've got head and shoulder eyes right now. But I mean, I see a head and shoulder pattern. Okay. How are we going to do this in such graphic detail? I don't know, but to me, and then there's a right, no, aka inverse head and shoulders, and then there's the neckline. You measure from there to there. This is the rules of the head and shoulder, and that's what you'll expect to happen. What the depth of the head is the outcome for the target. Right? That's what I have seen. Okay. So now this could play out in several ways. Okay. And to show you what I mean, we can look here at this example. Right? So in this mess, what do we see? We get a trend line break, don't we? Right? And when the trend line breaks, you're always looking for that area of resistance. You want it to break through. Right? So we've got this head and shoulder pattern. We get the trend line break. So, you know, we've crossed the head. And so this is going to be a shoulder technically, right? Here. And price can come above here and it could just run off, not look back. Price break, retest, and away we go. Right? But also we see here what happened, right? In that we got the break and it looked like it collapsed and you're down, you know, 100 odd pips thinking, oh Lord, this isn't going to work. 136 pips. This isn't going to work. And lo and behold, price then did what you thought it was going to do, and went up and away, and you weren't there. So what we do, we've got to consider that when we're thinking about what could price do here, okay? Because it can do the same thing. Break, hook, and go to target. What could it also do? Break, drop down here for whatever reason. Price doesn't need to explain to you or I. And then go. Okay. And of course, the worst case scenario is price could just violate the head and shoulders altogether, drop back down because it wants more liquidity. And it's funny, if that were to happen, there's nothing anyone can do about it. Is what it is. You know, the market has spoken. Right? Seems unlikely to me, to be honest. I think here we've got the 200 MA retest. It's gone a long time without a retest. If you look at the time, it hasn't done a retest. You can look back through a chart and you can just see that price hugs this 200 MA, it just doesn't stay a long time away from, or not too long. And the longer away the time it spends away from it, the more likely it's coming back to it. Yeah. But it's a long time away. Ooh, it's like a magnet. And price is going to come back to it. So in the same way, I think, well, price is due to come back and not run away from the 200 MA. It's given us a reversal pattern. It seemed that it tried it here and failed, right? And it's trying again. If at first you do not succeed, try again. Likelihood of this time is that it's going to make it. So we'll drop down here. So we could get a movement in here. So we could get a drop, 60 pips, and then it goes up. That's the 4-hour chart. We're going to look here on the, oh Lord, this is the hourly chart. This is our baby right here, right? We see a golden cross first attempt there, golden cross second attempt. Here's the attempt that could well work out. It looks beautiful. I'm loving what I see. I think this is an exceptionally beautiful trade. I think the target is right. So we'll put a couple of targets on it in the sense of where might it go. I like to do my targets on the bigger time frame because you can just pinpoint these loans, right? The 200 MA is definitely a target. If we go down to the hour chart, we can do our usual method. We'll just fib the head. So remember, the depth of the head is what pays out, right? So that would be the target here. So this is ambitious. That's where you leave a runner. This would be the target. There's just 150 pips once it breaches above there. Again, we don't bet the farm. Reasonable. If it breaches, we're going for the 200. Your stops would be obviously below here. And I'd have a second entry because, yeah, I'd like for it to pull back down. Yeah. To go, there's 237 pips there. And then you've got, so if it pulls back down, there's entry 1, there's entry 2. Oh Lord, guys, do we this is what we do, isn't it? We put the lipstick on. Okay. So entry 1 will be there. Entry 2 would be there. Okay, this is just a clear plan. Okay, let's target 1. Target 2. Okay, and then up here really is, it's a runner, right? That's it. No, that's what I see. And of course, your stop loss is below the 0. It's you can see it says stop loss down there, doesn't it? Okay. There's the plan in its glorious detail. That's what I see with this Dollar Swissy. The bigger move is, for now, is up. Okay. I think it may well want to get into that liquidity further below, but I think it'll take an up move first, you know, and then probably just wham down with a wick and just trap everybody and you know, so, you know, stop to break even, stop loss to break even when you pass entry 1, of course. To hit target 1, stop loss, move up here as you go into target number 2. So you're protecting your profit, right? The runner, obviously keep the stop loss above break even. So if it does wham down, you get a little something. If you make it all the way to the runner, you've hit gold. If not, well, you know, we've had a plan. We've had a plan. This is a trade plan. We've had a plan, and all we've got to do now is trade the plan. So plan your trade, trade the plan. Thank you for stopping by. I think it's going to be a phenomenal year. All these trades, they play out time and time and time again. So no need to bet the farm. There's going to be plenty more of these trades in the coming days and weeks. Let's watch, guys. Let's see how this trade plays out. So, I mean, again, remember, there's like there's a little, perhaps 50, 60 pips down for the first entry. And we're prepared with the second entry in case it breaches the highs there. And away we go. So we're prepared for what the market may attempt to do. Whether it just decides to run, we're going to be in. If it decides to do a pullback, we're in. And if it decides to fail, then we've mitigated our risk. We've got our stops in position. It'd be a sucker if it just did a little stop on there, wouldn't it? And then we went up there. I've seen that happen too, but we're prepared for whatever the market may send us. So anyway, short video. Thanks for stopping by, and share the video with friends. Someone you think might benefit. Be sure to like, subscribe if you haven't done already. Comment in the section below if you'd like me to look at perhaps a different pair and give some analysis on that. And certainly look forward to talking to you guys once again in our next video. Alrighty, guys. Thank you so much. Bye-bye.